The rising and negative trends in the price of Tesla stock have demonstrated the extreme volatility of the stock market. Nevertheless, despite the many difficulties facing the stock market, there are certain elements that can drive up the price of Tesla stock. According to Bush and Dan Ives, these variables could triple the value of Tesla stock by the end of 2023. Hi everyone, happy to be back at Tesla tomorrow. Previously, Dan Ives predicted that Tesla stock may rise by 35% this year given its current pricing. In China, cuts have already achieved great success. Tesla continues to experience weak demand, so the business slashed prices twice in China. In a poll of more than 500 Chinese consumers who plan to purchase an electric vehicle this year, Webb discovered that 76% of respondents were thinking about purchasing a Tesla, outpacing regional rivals like Ford and NIO. Additionally, almost 70% of respondents claimed that the recent price reductions had positively influenced their decision to buy a Tesla. Shortly after Tesla's Model 3 SUV's pricing were cut, the Bush survey likewise came to an end. Europe, the US, and Hawaii. Dan Ives claims that Tesla's recent price reduction is a major achievement thus far. He went on to say that China is at the center of the Tesla growth narrative globally, and that it looks EV buyers have reacted favorably to the price reductions, hastening their choice to buy. Ives restated his 12-month price reduction projections for Tesla shares, which entails a 35% increase from the current levels. According to the stock research, Tesla's price reductions in December were an indication that the business was becoming more aggressive as the competition for electric vehicles heated up. As I mentioned earlier, valuation watchers were beginning to take notice of the steep decline in the price of Tesla shares in 2022, stating that Tesla has not traded at these levels since 2018. The Whiteboard channel reported that when looking at Tesla's stock price on an EV/EBITDA basis, it was at its lowest valuation to date. So what exactly, according to Dan Ives, will cause Tesla's stock to increase threefold? Before we find out, don't forget to hit the like button, subscribe, and turn on notifications to stay up to date on all things Tesla. Ives stated that the first factor was the global EV sales, which are still sort of the most ambitious climate law in American history. The January tax credit by the Inflation Reduction Act of 2022 attempts to lower the cost of electric vehicles a little bit. During $369 million have been set aside for climate action during the course of the measure that President Biden signed into law on August 16. A portion of the budget has been set aside to improve tax incentives for the purchase of electric vehicles. While the criterion for the tax credit may prevent certain enterprises from taking advantage of this opportunity, the car's batteries must reach a minimum threshold of parts sourced from the U.S. or nations with whom it has a fair trade agreement in order to be eligible for the credit. A number of investors thought Tesla was unquestionably among the automakers eligible for this tax incentive. Even though this did happen, the IRS claims that not all Tesla vehicles are eligible for tax credits. For example, the MSRP limits for electric cars and electric SUVs, trucks, and vents are $55,500 and $80,000 respectively. The Model X SUV and sedan version of Tesla, in particular, are not eligible for the $7,500 tax credit. This is due to the fact that the Model X costs roughly $121,000, while the Model S starts at about $105,000. It seemed the IRS only took the SUV and Model I into account, even though it has 7 seats. This is because the 5-seat Model I Long Range and the 5-seat Model I Performance are not qualified for the tax credit because their starting prices are less than $66,000 and less than $70,000 respectively. At the moment, the Tesla Model 3 Performance was also not eligible because it starts at $62,990 and goes above the $55,000 threshold. However, the Tesla 5-seat Model I has now been made eligible for the tax credit, and it is believed that this will positively affect demand. It is important to note that while the previous announcement of the tax credit had allegedly affected demand, the fact that some of Tesla cars missed out on the tax credit does not translate to a future decline in the demand for these cars. Whether Tesla's EVs get the tax credit or not, the car company is still in a good position to record enormous demand in the coming years. For instance, if Tesla keeps prices the same, the demand for its cars will inevitably grow, especially as the car company continues to improve on ATVs. And if the car company chooses to increase prices over the coming years, while the demand may not be as high, its profit margin is still sure to increase in the coming years. Dan Ives also pointed out the Gigafactory ramp, since Tesla intends to launch further Gigafactories in the next years. Musk stated during Tesla's annual stockholders meeting that he believed the company might someday produce up to 10 minutes, 12 gigafactories worldwide. Additionally, the CEO stated that by 2030, Tesla might be able to create up to 20 million electric vehicles annually, with each factory producing between 1.5 and 2 million vehicles annually. Fremont is currently home to gigafactories for Tesla. Calif. Ignites Nevada, the Buffalo New Haven to reach 10 minutes, Austin, Texas, and other non-US locations in China and Germany. 12 Gigafactory. Elon Musk claims that Tesla may unveil a Gigafactory this year, but the company would also need to construct 3 to 5 other ones. Production at these gigafactories could reach previously unheard of levels thanks to automation. Another 8 points for Tesla's development is the dissipation of worries around Musk's deal with Twitter. Dan Ives stated in a recent note that finding a successor to lead the social media firm was the second biggest desire on his Christmas wish list. He feels that in order to put a stop to the recent Twitter chaos that has caused Tesla a great deal of headache, Musk should appoint a permanent CEO for Twitter. Although Tesla has successfully met with the delivery of its anticipated semi-truck, many Tesla enthusiasts were concerned that Musk was spending too much time and money on Twitter. Given that Tesla is still working towards full self-driving capabilities, it may be even harder to accomplish this with Musk's divided attention. Elon Musk will need to be present and committed to the development of other cars, like the RA attacks and Cybertruck, which have not yet reached the market. Nonetheless, the worries and anxieties have subsided because Musk is actively searching for a successor to take over as Twitter CEO. Regarding the Cybertruck's profitability and the potential growth of Tesla with this new technology, it has also given investors something fresh to discuss. The slowing of interest rate increases is what is driving Tesla. Given the signs of impending inflation, it's possible that the Fed will pause its interest rate hiking program. Policymakers are expected to approve another rate hike, perhaps by 50 basis points or 0.5 percentage point, as market expectations continue to rise. The Federal Reserve increased its benchmark interest rate by 0.75 percentage points in September. This was the third consecutive time that the rate increase was this large, raising the rate to 3.25%. The stock market was greatly impacted by this interest rate increase, which also caused investors to become more pessimistic about the future. However, because the Federal Reserve has acknowledged reduced inflation, these concerns appear to be abating. In addition, Vice Chair of the Federal Reserve Lael Brainard expressed optimism about the last U.S. inflation data, which indicated a deceleration in price increases, and predicted that the Fed will soon scale down its rate hikes. Governor of the Federal Reserve Christopher Waller has stated that, provided the economic data cooperates, he is open to lowering the pace of interest rate hikes soon. He claims that the data over the last several weeks has increased his comfort level and motivated him to think about stepping down to a 50 basis point raise and ultimately to the eagerly anticipated Cybertruck. Ives thinks this will be important for Tesla, and so does Garrett Nelson and other Tesla bulls. After years of delays, the Cybertron saga is finally coming to a close, and fortunately, the electric truck is preparing for production without requiring any significant redesigns. Just this fact appears to have prompted more new orders, and those who placed their initial orders years ago are continuing to do so. Over 1.5 million orders were just counted by the Cybertruck. Considering that all of the orders are totally refundable and non-binding, this indicates that Tesla made $1.5 billion before ever delivering a single Cybertruck. The majority of people want to go through with the other. There is no other vehicle in history of automotive industries that has gathered so much interest with people willing to put down their money without actually knowing when they're going to get their car. Hopefully, if all goes well, with Tesla's plans for the Cybertruck, customers can finally get their chance to drive their own Cybertruck, especially those who ordered early on, according to Garrett Nelson. The best thing that Musk can do is to be focused on more than just Tesla, and in getting the Cybertruck to market as soon as possible. He reiterated that the forthcoming model has the highest backlog of any forthcoming EV in the market by a wide margin, and so the sooner Tesla can bring the new car to market, the better. He believes that when people actually see the vehicle on the road, it's going to generate a whole lot more demand and more interest. You think that these catalysts can spur Tesla's growth in the coming months? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.